If 45 billion XRP are available, this would require a price of approximately $111 per XRP. We know that some of the XRP supply has been burned or lost via lost private keys, and a much larger percentage is probably locked up as long-term investors hold XRP. Thus, an even smaller supply of XRP requires an even higher price to provide the minimum liquidity to accommodate SWIFT. International payments, retail payments, credit cards, and institutional and retirement investments such as Grayscale and Morgan Creek Capital will drive demand for liquidity. This increase in liquidity will also raise the price which provides the liquidity, which creates a circle in which demand increases price, which increases liquidity, which increases demand. Once this cycle gains momentum, it's almost impossible to stop it. It has so much energy. So how high can this go? As of October 2017, it was calculated that the value of the world's asset classes total $1.14 quadrillion, with above-ground gold at $7.7 trillion, global stock markets at $73 trillion, global money supply $90.4 trillion, global debt $215 trillion, global real estate $217 trillion, and derivative markets at $544 trillion. If the entire $1.14 quadrillion value of all asset classes was tokenized via XRP, that would require at least $11,400 per coin. This example clearly demonstrates the scale of liquidity that XRP is designed to handle.
For customers that want to take advantage of using a digital asset like XRP for liquidity, what that means is instead of pre-funding literally the trillions of dollars that banks have with other banks around the world, they pre-fund that amount that sits there. It's really dormant cash sitting there. With digital assets, you can make that much more real time to enable a payment across a border into another currency in real time.
How much money is pre-funded and how long does it typically sit there?
There's $27 trillion sitting in these bank-to-bank accounts. They're called Nostro accounts, Vostro accounts.
Yeah.
It really is a problem that if we can reduce the time, the friction, the cost, we really can accelerate global commerce. And by reducing that friction, you accelerate that engine. It's good across the board. It's good for both companies in the United States. It's good for the unbanked communities across Africa. It really can fundamentally change the way the global financial infrastructure is wired.
But what about the other end, divisibility? There is a maximum supply of 100 billion XRP being divisible by 6 decimal places, meaning that the smallest unit is 1/millionth of 1 XRP. Think about this. Why would XRP's designers make the token so divisible in the first place? At a value of 40 cents per coin, this is absurd. After all, who could possibly require the use of 1/millionth of 40 cents? You wouldn't do that unless you plan for the token to be much higher where it currently is. But a much higher token value, say $10,000 per XRP, that divisibility makes sense for 2 reasons: low transaction cost and affordability for small retail use. The minimum transaction cost required by the network for a standard transaction is 10 drops. It sometimes increases due to higher than usual loads. Even in a $10,000 XRP value, the transaction cost still would only be approximately 10 cents. This is still exceptionally cheap. 1 cent is arguably the smallest denomination that would be necessary to use XRP as a means of transacting everyday retail exchanges even in developing markets. This could provide